Greetings, I'm Dr. Jennifer Madden, here to provide you some insight on how you can get started in your venture. So, I've outlined a couple of really useful kind of guideposts that I think will be helpful. So, first, I'm going to talk about some business terms that I think are important for you to have an understanding and grasping of. And then I am going to talk about some other financial terms that are also important as you're thinking about starting your ventures. And then I'm going to make a transition so that you can understand how these terms relate specifically to the nonprofit sector and how you might think of a business venture and how that relates to a nonprofit kind of social enterprise. So that's the plan. All right. So let's start with the business terms, ones that I think will be super helpful, ones that you've probably heard before, but I want to put it into context for you so it's super helpful for you. All right. The first one, profit and profitability. Super, super important. So when we think about profit, the definition of profit is just revenue minus expenses, and profitability is your ability to generate profit. So when you think about your ventures, your ability to generate profit is very important. It's also true even if you're going to have a social enterprise or a nonprofit organization. You still need to have profit and profitability. You need to have margin, the ability to have you know, additional revenue so that you can actualize your mission of your organization. No money, no mission, no margin, no mission. So profit and profitability, no matter what type of business venture that you're thinking about undertaking, it is really, really critical. So let's break down profit a little bit more. So it's defined as revenue minus expenses. I think we all have a good sense of what expenses are, but let's take a moment to also talk about revenue. So, revenue is simply just the total income generated by a business. And later in the presentation, we're going to talk about the different types of revenue that nonprofit organizations have access to. And when we think about revenue from the business sense, it's we probably would think of the sale of goods or services, and that's true all around. And when we think about the nonprofit sector, there's additional pathways that we can generate revenue, as you can imagine, like grant dollars. So, but it's also important that we can think about, what we use those grant dollars for. So those grant dollars you can think of them as buying a good or service for in your nonprofit organization or your social enterprise. All right, so let's also talk about some of the business terms that will be useful if you have a for-profit entity or nonprofit entity. It's always good to have a business plan, and a business plan is really just a document that outlines your goals and strategies for your business. And if you're running a nonprofit, you might hear the discussion around strategic planning, and so an implementation strategy as it connects to your strategic plan for a nonprofit is another way to think about the business of doing the work. You're going to have some SMART goals and some do your SWOT analysis. Those components also show up in your business plan, but it's really incredibly important for you to have a business plan so you can think about how you get from where it is that you are to where it is that you like to be. And a business plan is an especially useful document to help you get there. Now, if you feel like a business plan might feel like a daunting exercise, you might start with like a business model canvas, which is sort of like a one sheeter that allows you to look at your customers, to look at, you know, um, what it is that you're trying to sell, goods or service, and who else is providing that good or service. So you can think about the competition. You can think about what's your competitive advantage. So it just walks you through these little quick exercises to help you think about, your approach. So the other thing that's really important for all businesses is that you ground yourself in research. And so if we think about market research, it's just the systematic gathering and analysis of information about who your potential customers might be and how you might make good decisions about your business. That could be around pricing, that could be what to deliver, where to deliver. So having some good insight and good research is super helpful to guide you in the right direction. So market research becomes an important part of the work. And you can't start the word market without thinking about, of course, marketing. Marketing is really important. And, it's interesting because oftentimes businesses are like, oh, we're so, we have expenses and how do we invest in marketing? And oftentimes people think about marketing, they think about some of the large expenses relating to advertising and ad spend. But, with the emergence of social media, there's just so much opportunity for small businesses to really engage in marketing. So having a social media presence is a powerful way that you can promote, sell, and distribute your goods or services so that you can be impactful in your business. So when you think about marketing, really do think about kind of the play that you can have around social media so that you can have some affordable marketing opportunities for your entity. And then the other really important term to think about is this idea of scale. Scale is important because it, by definition, it's the ability of your business to grow and expand its operation so that you can, do more, have a larger impact, grow the business. This is important for um, your for-profit enterprise as well as a nonprofit enterprise. How do you grow your business? How do you impact more people? How do you have sustainability? And sustainability is another important term when you think about having enough resources in order to be impactful in your work. So, we've heard of these terms, and they're really important, and they can be very helpful. So, oftentimes when you think about and you hear some of these business terms, you're like, oh, I'm not sure if that applies to me. I'm just a micro entrepreneur, a micro business, 0 to 5 employees. Maybe you're deciding to keep your full time job and you're thinking about starting this venture in addition to your full time job. And still, all of those, no matter what the size of the business, if it's 0 employees, if it's five, if it's 100, they're still considered a small business. And these concepts will be critical for you no matter the size. So understanding your profitability, understanding revenue, putting together a business plan, being able to ground your way forward in data and information from that you gain from market research is also super important for you to be successful in your business. So now I want to talk about some financial terms that I think could be super useful for you. And so these are terms that are often used when businesses are moving through their day to days, and just want to say a couple words on them because I think they could be important for you. So the first, of course, is cash flow. Cash is the lifeblood of all businesses. Understanding cash flow is incredibly important. And it just means by definition the movement of money in and out of a business at a specific point in time. Cash flow is important because you have to be able to pay your employees or pay your expenses, and understanding when dollars are coming in and out of the business is important. So for example, if you bill a client or you're thinking about when dollars come into the business and what is the timing of that. This becomes even important if you're running a social enterprise or a nonprofit organization. It's even more important because maybe you've received a grant and you have to be mindful of, is this a reimbursement grant? Meaning, do you have to do the work and incur the expenses and then bill for your reimbursement? So that means you need to have fund. You would need to have access to cash flow ahead of time so that you can incur the expenses before you can get reimbursed for those expenses. So if you have a sponsorship, when is the sponsor supposed to pay that sponsorship? If you have a nonprofit, if you're in a for-profit business, even if someone you know write you a check or send you a PayPal transaction, how soon is that cash available into your account? Oftentimes, and I use the check example because You could pay for something by check, and that check can be held for 2 days or 4 days, even though that the cash can come out of the person's account who wrote the check pretty immediately. So this idea of float, that comes into play. But being mindful of how cash flows in and out of your business is really, really important. And the other really a good term to be mindful of is this return on investment, known as ROI. And so this is your kind of measure of profitability when you're looking at the net profit divided by the initial cost. But the return on investment in the nonprofit sector or in the social enterprise sector could also be the social return on investment. So, what does it mean when you're um, educating young people or providing activities in a after school program? So there's a return on investment. So if people invest in your organization, they're able to buy a certain number of hours of tutors, take for example, but they're also getting this social return on investment where young people are getting mentored, and they have activities, structured activities to do after school. So there's there is more opportunities for them to grow and thrive. And so there's some things that you can capture clearly financially, and then there's some other things like social return on investment that's important to capture in your understanding of your venture as well. Some other financial terms are important as they come from the core statements that a business has. And so when you think about, for example, an income statement is also known as a statement of activity or a P&L, a profit and loss statement. And what this financial term is, it describes a document that serves as a financial report that really summarizes your income and expenses of your entity at a period in time. And so the income statement is important because we need to have a sense of, where's our income, our inflows going, where's our money coming from, and what are we spending that money on? What are the expenses? And the other incredibly important document that you have also in your business ventures, in your social enterprises, in your nonprofits, all of them, is the balance sheet. And the balance sheet, what this is, also known as a statement of financial position, and it's a snapshot. So it's a moment in time, and it gives you a very comprehensive picture of what the financial situation of your entity, of your organization is, based on your assets, the things that you own, and it also tells you, what you owe, your liabilities. And so being able to look at your assets and liabilities, it gives you a sense of, you know, where the organization stands. So some other really important financial terms that are useful includes, as you can imagine, the budget, the fundamental building block of any business, be it a micro enterprise, again, 0 to 5 employees, a small business under 100 employees, or any size business. You need to have a budget in place. And a budget is really your financial plan for typically the coming year. And it includes an estimate of your income and expenses. It also can include your fiscal accountability. And if you're a nonprofit, what might be your priorities that are connected to your mission? And again, if you're a nonprofit, and even if you're a for-profit entity that has a board of directors, or a board of shareholders, there's some approvals that might be necessary. If you're a small business owner, nobody's approving that budget, but you still need to have one in place. And again, the budget is just a really important tool because it allows you to see, what you kind of where you thought you would be, and then you can look at budget to actuals, which is kind of like the next term I have, the actuals. And so the budget gives you these estimates, and then you also need to track your actuals. And these are the true financial results. These are what you actually spent. This is what actually happened. And your actuals on both the income and expense side the actuals on both the income and expense side may differ from what you had initially projected. So having this information can help you be better about putting your budget together for the future. So you have a sense of what things cost. You think, for example, that you think, for example, that you're just going to pay this amount of money for rent, and you think that, okay, that's set, I signed a lease. But maybe in your initial budget, you didn't account for some fees or services that needed to be put in place, and so your budget might be one thing, but in actuality, you had to spend another X amount of dollars to account for, some security expense, or some shared expense that has to be covered. So having your budget and having your actuals are super important for you. So again, in these kind of financials, you also want to be clear about your income, again, your revenue and support. And I added the support piece because that's a nonprofit dimension. So when we think about revenue, again, all of the resources that resulted from like a sale of a good or service, or again, maybe there's some investment income, or there's some other type of revenue. And then there's also support. And this could be, your in-kind contributions if you're putting together a nonprofit organization. So grants or charitable donations, these are other forms of income that a typical for profit entity wouldn't have access to. And of course, your expenses. So if you're a nonprofit or a for profit, there are similar expenses across both of those types of entities. So wages and operating expenses you're going to have no matter what type of business that you have. Nonprofits, they're also required to track by functional classification, and this tracking happens so that they can report to the tax return that a nonprofit has to do, known as a 990. And so having an understanding of what some of the traditional typical classifications are, as well as tracking, expenses as they related to program services and administration and fundraising, will be important added dimension for the nonprofit sector. So some of these financial terms, very straightforward, but I think it's important to see how similar they are across both the for-profit and the nonprofit sector, so that you can see, a for-profit and a nonprofit, there's still a for-profit corporation, a nonprofit corporation, that no matter if you're thinking about, wondering how you should launch your venture, you still need to have a good understanding of key business terms and key financial terms. And I want to just spend the last little bit of this video just talking about some of the unique characteristics of the nonprofit sector if you're thinking about a nonprofit social enterprise as your venture. So I want to talk about, some of those components around a nonprofit organization. Now, first, nonprofit is really a terrible name for calling the nonprofit sector, because you still need to generate a profit, and there's been lots of discussion around, really smart people who are thinking about what else should we call this instead of the nonprofit sector, because it's given a bad impression that we don't need to generate profits, because we do. So there's this, here's the listing of some of the names that have been toyed around with: the third sector, and third meaning that the first sector is the private sector, the second sector is the public sector or the government sector, and the third sector is the nonprofit sector. So maybe we should be called the third sector. But it seems really weird, right? The independent sector. That name kind of comes from, typically a for-profit entity. They have, you shareholders, and shareholders get to have a part of the profits. But in the nonprofit sector, the profits go back into are reinvested into the organization. Shareholders don't get anything. If you get a board for a nonprofit, they get zero payment, nothing. If you're on a board of a for-profit entity, you likely are being paid, compensated for that, sitting in that seat. My dream is to be on the board of a for-profit. The social sector, because of the social services that many nonprofit organizations provide. The community sector, a lot of the community building that many nonprofit organizations do and deliver. The charitable sector, because The private sector doesn't get benefit of charitable contributions. That's just the nonprofit sector, specifically the 501(c)(3)s. The tax exempt sector, because that is a benefit of being a 501(c)(3), this kind of ability to receive charitable contributions and have some tax exemption components. The civil society sector is another name. Social enterprise, lots of nonprofit social enterprises exist, and internationally, it's often known as a non-governmental organization. So, these are just some of the other names that the nonprofit sector are known for, but they still continue to be mostly called the nonprofit sector. But your insight is knowing that even if you're running a amazing nonprofit, you still need to generate profit. So no margin, no mission. So we need to price our services appropriately, even if we're only charging the foundation for these services. We still need to know the value. We still need to know what our expenses are, and we need to raise enough money to cover those expenses so that we can do the important work that we want to do. The other thing I want to kind of speak to, and I mentioned it a bit just a slide ago, is that the specific type of nonprofit is the 501(c)(3). It's a specific type of tax exemption status granted by the IRS that allows the organization to receive tax deductible contributions. There are other types of organizations. There's 501(c)(4)s and C5s, but you want specifically to be a C3 because that gives you a really great advantage. Unless, of course, you're trying to do, a bunch of political law advocacy, then it's like a C4. It's different. But the C3 again is the one where the lion's share of the typical social enterprise nonprofit is situated. And I just thought it'd be interesting to demonstrate. There's an entire spectrum when we think about social enterprises. And there can be things that are completely nonprofit organizations to completely commercial. It really does cross the gamut. So I've just listed alphabetically a bunch of different organizations that you probably have seen in your day to day. And then I wanted to kind of map them for you on this kind of social enterprise spectrum so that you can see the power in the potential of your venture idea. So, if we think about a traditional nonprofit, that's more like a homeless shelter, or even Habitat for Humanity is more of a typical nonprofit, a traditional nonprofit. And you also have nonprofits with earned income, and these are like the Girl Scouts, Cookie Time, Thin Mints. That's me. The YMCA, all of the activities they have this earned income potential for it. Goodwill, the stores. There's a hybrid nonprofit, a bridge band. They do work in. They charge for services as well. There's a B Corp. So Tom Shoes, Patagonia. These are examples of for-profit entity that have like a social drive to it. So they are benefits corporations. And then of course you have your purely commercial like Amazon, we're making profit on what we do. You can buy shares, all of that stuff. So there's so many different types of social enterprises that run this gamut of what's possible for you as you're thinking about, your venture. And I'll just add just a couple other things before I wrap, and just the importance when we think about our nonprofit organizations of fundraising and revenue. So, fundraising, corporate sponsorships and partnerships, special events, all of these things help generate revenue for nonprofit organizations. We talked earlier about revenue. These are the multiple income streams. And for nonprofit, there are additional income streams that are typically not available to a for-profit. Who's going to make a donation to Starbucks? I'm not. I want to buy something. But you can, as a nonprofit, receive donations, so donated income. You can receive contributions like grants and gifts. You can also have earned income, so fees for service. You can have a social enterprise. That's another way to generate some revenue. And also, nonprofits can have access to in kind contributions. So these are non financial goods or professional services. Someone donates their time, so that somebody donates some materials to you. So these are all different types of funds and revenue streams that nonprofit organizations have access to. These are super important. And then the last thing, and I referenced this before, but the governance piece. So nonprofit organizations, they're governed by a board of directors. And again, the board of directors is responsible for strategic planning. They provide strategic guidance, financial oversights. They make sure that the 990s get filed, and they hire and fire and evaluate and support the executive director. And then it's the executive director's responsibility to manage all the other day to day of the organization. And the board also just ensures that the organization is in alignment with its mission. So it's and you only need three individuals to create that inaugural board for your nonprofit organization. So I hope this information was helpful to give you just a glimpse into the importance of both the business terms, financial terms, and some terms related to the nonprofit sector. And I hope you're excited about your social venture, your social enterprise, and I hope you're thinking about ways that you can have an impact in your community. Thanks again. I'm Dr. Jennifer Madden. It's been a pleasure.